But in this last slide, last presentation, I want to go over and focus on the impact of the sales tax relief credit on Oklahoma families. And to lay out what's to come, we'll first cover the tax burden the Oklahoma tax code places on low and middle income families, which is data that Eli already covered. So I'll go through it pretty quickly. I don't want to belabor the point. And then we will conceptualize the cost savings of the sales tax relief credit can provide if it were modernized. So beginning here, I just want to provide the data that I'm going to provide is the same that Eli provided, but I provide it to push back against the narrative that low-income people get such large tax breaks from the state that they aren't paying any taxes. That's simply not true. Low-income individuals and families pay substantial taxes. It just looks a little different for low-income families than upper-income ones because the low-income households pay more of their taxes gradually throughout the year in the sales tax.
I'm sorry.
Go ahead.
Where is that narrative coming from? I've never heard that.
Well, I'm glad you've never heard it, but it is a pretty common narrative of a state handout. People are just getting away with not paying their taxes is the kind of narrative.
Okay.
I appreciate the pushback.
It's because we all understand that we can have pushback without having to fight and and have separation and
Absolutely.
And it's okay.
Yeah, no, I agree.
But I have never heard that. Now I've heard that more from a federal perspective than a state perspective. We got, all these benefits, blah, blah, blah.
Right.
But not so much from a state perspective. So that's why I pushed back.
No, fair enough. So I won't belabor the point, but this just shows how low-income families pay higher percentages of their income in taxes than higher-income individuals do. And the bulk of that is because the sales tax is regressive, and so lower-income individuals end up paying up to 8% of their income in taxes versus higher-income individuals in the dark blue pay only 1.29% of their income in sales taxes. And we can see that the income tax is the opposite. It's progressive. It takes less percentage of lower income households' income versus a higher percentage of higher income families. So, yes. Yes.
So at the bottom, that's the income level, correct?
Yes.
The 683.5 is the 1.29. That's the income level.
The
correct?
683.5
is the income level.
Is the income level, yes. And above, yes.
I'm just looking where I'm at. Thank you.
Okay, yeah. And I just put the income levels instead of like the low 20%, middle 20%.
No, I appreciated it.
Yeah.
I just it went by and I couldn't read it on my paper, so I was looking up there, but thank you.
Absolutely. So the sales tax relief credit is a tool to address the disparities we have just discussed by providing targeted relief to low-income families. I want to preface this section that I'm starting by saying that in this example, we're only taking account of Oklahoma level taxes and Oklahoma level tax credits, since this interim study is focused on a state level tax credit. It does not talk explicitly about the federal level taxes or tax credits because it's beyond the scope of this study. So let's consider a middle-class family with 3 children where both parents work. They earn a joint income of $50,000, but that's not how much they get to take home. Of course, they have to pay taxes. They have to pay $227 in Oklahoma income taxes in April, but we all know that Oklahomans pay more than just income taxes. We just saw data about sales and property taxes at least. So the sales tax is paid every time we purchase something. For a family with a joint income of $50,000, their sales tax cost is estimated to be $1,650 annually. Again, this is not a lump sum amount people pay in April, but it is the accumulative amount people pay over the course of the year. Lastly, there's the property tax. This family annually pays around $1,050 for their property taxes, either directly if they're homeowners or through their rent if they're not. All of this added up, we see that our family of 5 spends about $4,895 in taxes throughout the year. But this is without factoring in credits. Let's see how this changes if we account for tax credits. Oh, please correct my math if it doesn't add up right. Oh, it absolutely does not. Where did I get that number from? Oh my God. Okay.
2977.
Thank you for that.
Just for clarity.
I promise I know how to do addition.
Look, it's okay. Things happen, but at least y'all know I'm paying attention.
Yeah, that's true. The following presentation goes off of that number. So let's just assume that this family pays $4,800 in taxes for now. Thank you.
I was like, wow, that's 10% of their income.
You're like, it is true, their burden is high.
Thought we were the lowest tax burden state in the year.
I'm so sorry for that. I can send y'all corrected information as well.
Yeah. I was like, man, we are way out of line here. Okay, I apologize.
No, please, much needed correction. So let's look at how state tax credits could alleviate this imaginary tax burden of $4,895. So this family, because they have children, would qualify for the state child tax credit, which is $100 per child. They have 3 children, so they receive $300. They also receive the state earned income tax credit, which is 5% of the 2020 federal EITC. So that comes up to $333. And lastly, the Oklahoma sales tax relief credit kicks in for $40 per exemption. And this family has 5 exemptions, so they get $200. Subtracting this credit amount from the imaginary number, we get another imaginary number, $4,062.
Let's calculate the real number if you don't mind.
That's fine.
So, I'm going to subtract 300 minus. So the real number is 2144.
2144. You're going to have to do some more math for me following this one, too.
It's okay. I'm not even a math guy.
We all do addition, subtraction, percentages. Okay. Wait, what's the real number?
Oh, 2144. Is that what it said?
After the deduction.
After the deduction, 2144.
Yeah.
Love this. This is so interactive. I should do this more often.
Yeah, that's a way to
So,
this new one would, yeah.
so this is the same information that I just showed, but now I'm trying to account for a sales tax relief credit if it was $200. So the taxes owed would be the same, whatever that number was. The child tax credit and the earned income tax credit wouldn't change, but the sales tax relief credit would go up to $1,000. And so this reduces their income to $3,261. Do you want to do? Thank you. $1,144. And that's a 20% decrease in the family's tax burden. I think the percentage difference should remain the same. Okay. This increase reduces the family tax burden by 20%. This saves the family $800, which comes close to covering half the amount they pay cumulatively on sales taxes throughout the year. Because, as you recall, the state eliminated the state sale grocery tax on groceries, Oklahomans still pay a lot of sales taxes at the county and city level, and they also pay state sales taxes on other items that are not groceries. And so now this family can use that $800 savings on other essential things like rent or unexpected car troubles. I also want to point out, again, bringing in the conversation of benefit cliffs, if they make $1 more, they lose whatever that credit amount is, and that cliff is more problematic when we raise the STRC, because now they're losing $1,000 instead of just $200, so the impact's higher. So to summarize, the sales tax relief credit can be modernized by increasing the credit amount. by increasing the income eligibility for the credit, or by implementing a phase-out scheme as presented by ITEP, and preferably a smooth phase-out scheme and not a stair-step, which helps people avoid being essentially punished for getting modest raises. In this last slide, I want to compare the STRC modernization to the grocery sales tax elimination. The sales tax, the last legislative session, Oklahoma legislature passed the grocery sales tax exemption or elimination. It aimed at alleviating grocery sales tax burden on low and middle income households, but instead the benefit was upside down, disproportionately benefiting households that made $130,000 annually or more. The lowest income household saw a tax cut of $65, which is 1/4 the size of the $408 tax cut that the top 1% saw. A modernized STRC with a phase out in the amount of $265, which is the first model that ITEP presented, would provide targeted tax cuts to low-income households, ensuring those funds go to those that need it. The STRC modernization would only cost the state $202 million, which is cheaper and provides more targeted benefits than the $307 million annual loss in revenue we've seen with the grocery sales tax cut. And with that, I will stop talking until I'm asked another question.
Can I trust those last numbers?
Yes, those last numbers are from ITEP.
So
you can trust ITEP.
So question, I want to, again, I want to push back just a little bit.
Yes.
We're using the grocery sales tax cut right here.
Yes.
That 0 to 24,000.
Yes.
That lowest 20%. Are they receiving SNAP?
Yes, absolutely.
Okay. So
yes, that is not included because you don't pay sales taxes on
okay.
SNAP.
Okay.
Yes, absolutely.
Okay. Thank you.